Welcome to the Utah Rental Property Insider Podcast. We're going to shift gears a little bit and do more market update styles for this and bring in some guests eventually down the road. But we want to get into a few hot topics today.
Today's hot topic, we're going over what's pretty much all over the headlines right now, is the proposed 50-year mortgage and what that means for you as a buyer, as a first-time home buyer, or as a rental property manager here in the Utah County.
Yeah. So as you can imagine, it's going to lower the monthly mortgage, right? And that's the whole goal of it, to make housing more affordable. People can actually cover the costs they need to as comparison to rent. And it's just a proposal right now, so there's no guarantees that it's going to roll out, but it's possible.
It is possible, and it's at minimum a year before a change like this could even happen. So it's not like this is getting proposed and next month we're going to start seeing these 50-year mortgages. So it's just something to keep an eye on and to educate yourself on.
Yep. Yeah, lots of legislation still needs to be done, and it could affect locally too with some of the loans that we have just based on rural areas or whatever. Out in Eagle Mountain, Saratoga Springs could affect things out there as well. So they proposed a few years ago a 40-year mortgage, so they've now jumped from the 30. And this is all just in relation to Freddie and Fannie loans, which affects FHA loans. So they have a 40-year loan that is only using small criteria of loans, and it's not for first-time purchases. That is available, but jumping to 50 years, it would change quite a bit, and we want to get into that a little bit, what it might actually change and what it would look like for a homeowner and also as a rental property owner, what that might look like. So before we kick that off, should we just tell them where the market's at?
Yeah, let's give a little market
update.
So
pulled some stats. So we've got every month the MLS comes out with market updates or stats around what's going on and how things are looking. So I just wanted to go over a few of those. We'll post these. You'll be able to have access to them. But median days on market right now is 43 days. So it's down just 1 day less than last month. So their homes are selling about the same rate, and we're not into the 60 days, which we've seen before. So we're in an okay spot. But as far as homes on market, it looks like we are about 22% above where we were last year. So we have currently 13,661 homes available, active listings on the market right now. So what do you think that ultimately, what does that say as a experienced real estate agent having that many homes on market, and what will it likely do to price and stuff?
Yeah, I mean, typically when there's more homes on the market, homes are sitting a little bit longer, you start to kind of fight for the listings a little bit as a seller. If your neighbor's listing their house too, it's hard to compete with them. And so typically it will start to draw those price cuts a little bit to try to compete and sell. But I think now too, we're seeing a lot of people more so just like selling to sell, or if they have a job and they need to move, then they're moving, and sometimes they can't have their home sit for 43 days, and so they're taking drastic cuts to just sell the home. But they're still trying to keep their equity that they've built. A lot of times, these people are moving, it's only been 2 or 3 years, and so don't want to go under on what a big purchase that they've done, but yeah.
I'd say like people are obviously don't want to take a loss on the property, but yeah, I've seen in a few cases people have had to, but generally the ones that stick on the market and why prices haven't really dropped a whole lot in Utah is because a lot of people have really low interest rates, and which means that they typically will have a lot of equity as well, which because over that time as the interest rates ramped up really quickly, people locked in at a lower rate, they ended up building a bunch of equity. Median home price right now in Utah is $580 for a single family, and it's $410 for a town home or condo. We ran some stats, and our median home price is at $586 for some of the numbers. So we're basing it off of single family mortgages, and we'll compare that for rentals as well. So as you may be aware, FHA loans, you can pay as little as like a 3.5% for your down payment. And so I just wanted to give some stats on what that actually might look like if you were to consider this, as it may be rolled out. Likely will be rolled out is my guess, to try to help with the affordability problem. And it's a government program, which will likely mean that it causes more damage than good.
Happens.
So this is where we're at. I just want to be realistic with you, so you kind of see around if you would even want to consider something like this. So another important thing to know with FHA loans in particular is that just a few years ago, about four or 5 years ago, they changed the mortgage insurance that you would pay with the mortgage. So any loan requires mortgage insurance if you put less than 20% down. But FHA loans require now that you pay the mortgage insurance for the life of the loan. So that change, it definitely would affect the long-term total cost for this loan. And if you're moving it from 30 years and now you're going to be paying mortgage insurance for 50 years, then that definitely would impact things. And the likelihood of wanting to switch out of a 50-year loan if you know that your total mortgage cost is going to go up because you're switching to a 30-year, it's going to keep people on an FHA loan longer. So those are some kind of things that we probably wouldn't normally talk about, but it's worth considering. So,
no, for sure, because most of the time with the conventional, you just got to pay the insurance for the 20%.
Yep.
And then you can kind of keep moving on from there.
Yep. Yeah, and you can just, after the 20%, you can reach out to your mortgage company and just say, hey, you ask for the removal of the mortgage insurance, and they'll do it. So they're required to actually after 21.5%. So
with today's average here in Utah County, with the home price being about $580,000, just going off of a fixed 30-year FHA 5.5%, I mean, you're looking at your monthly payment on a 30-year to be about $3,200, a little over $3,200 a month. With this new 50-year proposal, you're looking at $2,800 a month. So on the average home price, you are saving about $400 or $500 a month, but in the long term, you're paying almost double in the interest. So that $500,000 home that you would be paying an additional $500,000 for in interest, you're probably going to be paying close to $1 million.
Yeah. We ran the numbers, and so what it looks at, total interest paid over a full term, 30-year term, would be at this median home price currently is $600,000 in interest, and then for a 50-year would be $1.16 million. So total extra interest paid would be $515,000. So almost the cost of your home.
Yeah, absolutely.
Different.
Yeah.
So and more. So that's definitely something to take in consideration. Also, mortgage insurance cost over that time. So your mortgage insurance cost at a 30-year is around $70,000 in mortgage insurance by itself. So that's not interest, that's insurance. And for a 50, you're going to be paying $120,000 in insurance costs. So you're going to be paying a little over $51,000 more in insurance.
Yeah.
Which is crazy. And that's just if you don't, the insurance isn't to protect your home, it's to protect the lender, that if you defaulted and stopped paying your mortgage, that they would be covered. So that's what it's for.
Even with the conventional going 20%, that's still going to, your monthly payments are less, so you're getting to that 20% less. And so you're going to be paying more in your mortgage insurance.
Yeah.
It's crazy.
Yeah, we bring this up not necessarily to say like, this is a really bad idea. It feels like that. And in a lot of ways, it is a bad idea. But most people either move or refinance. I think the average time people live in their house is 7 years, something like that. And they refinance a lot sooner than that. I don't know the stat around it, but it's probably within like 3 to 5 years. So the likelihood that you're going to stick with something like this is not super likely.
No.
And if interest rates come down, you likely would refinance into something that is a 30-year. You can remove mortgage insurance. You're going to look at your overall monthly cost, and when it makes sense, you'd switch out of it. So
yeah, and with the average home buyer now being aged 40, a 50-year mortgage is kind of a lot. So you're going to be pushing 90 by the time you're maybe paying that thing off. And with that, though, every 7 years, it helps a lot. I just got a buddy in a home for a 7-year adjusted rate, and he's like, yeah, I'm going to take that rate because I'm going to move it in 5 years anyway. Like, okay. So it all depends on your mindset going into these purchases, right? If you're going to buy them and rent, if you're saving $500 a month on your mortgage now, and you can now maybe rent it at that price again, it could be a little bit better of an opportunity for you. But you're still, the thought of hanging on to that house for 50 years is a lot.
For sure. Yeah. And you want to know, we're just here to give information, so to learn kind of the rules around it or why they're doing it. We're happy to help kind of guide in any way that you want help with it, whether it's on the purchase side or on the refinance side. We have a team of lenders, and then on the rental side as well, to kind of give you help and guidance that way. So anyways, that's it for today.
Yeah.
Unless you have anything else.
This has not happened yet. It's a proposal. Everybody's acting like the world's ending. This has already been approved. No, do your research. We'll keep you updated. And yeah.
Okay. Yeah.
That's all we got.
Catch you on the next one.
See ya.